Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is we get everything you need to know in 90 seconds at 9 o'clock. With news, it's the turn of currency markets to be roiled. First, the US Fed is scrambling to ensure that foreign exchange markets continue to function properly. Even after today's new FEMA repo facility scheme, the greenback rose on strong demand, something they're trying to prevent. And this is despite consumer confidence falling sharply in the US in March, mirroring an earlier survey. But the fall was not as much as most analysts were expecting. And the widely watched Chicago PMI also fell sharply, but also not as much as was expected. But there has been a stunning bounce back in the Chinese PMIs for March, a recovery that was as swift as it was unexpected. This was the official data, so cue questions on credibility, but it may underpin Western expectations that we will get a similar effect when our virus emergency passes. Large development deals involving private industry, including many foreign firms, have been signed up in this past week in China worth some $100 billion. China is racing to capture more of the world's capital investment budgets. Meanwhile, in the West, it is very much all about economic survival and subsidies. In Canada, it looks like they'll need a $1 billion bailout or more for public transit systems, and that's probably the tip of a global iceberg. In Australia, consumer confidence has sunk to record lows, and the expectation is it will fall further from here. On Wall Street, the S&P 500 is down 0.8% after starting lower, then posting some net gains and only to fall away again in afternoon trading. It is a wild quarter-end settle up there. US Treasury 10-year yield is unchanged today at 0.67%, and gold is down sharply today, adding to the recent declines, down another $19 today to $1,592 an ounce. And US oil prices are holding their new low levels at just on $20 a barrel. The Brent benchmark is also low at just under $23 a barrel. And the Kiwi dollar is starting today very much softer than this time yesterday, ending a week of elevation. Now at 59.3 US cents and down almost 1 cent since this time yesterday. On the cross rates, we're just a little softer at 97.2 Australian cents, down 1/4 cent. Against the euro, however, we're very much lower, down to 54 euro cents and a fall of 1/2 cent. This shift down has taken us back to levels we had at the same time last week, where the TWI was at 65.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.